This is an overview of the top charts and trends to watch in crypto and a weekly update on the latest at Token Terminal. Hey, it's Oscar here with another episode of Weekly Fundamentals. Our new earnings leaderboard has been live for a bit over a week now, and the response to it has been great. So thank you to everyone for the feedback and support there. And speaking about earnings, let's take a look at the top earners over the past 7 days. And just as a reminder, earnings in this context means revenue minus token incentives. The first thing you'll notice is that several projects in the top 10 do not have a token and are thus not paying out token incentives to users. Out of these, OpenSea and MetaMask top the leaderboard on almost all timeframes. Of projects with tokens, Ethereum Name Service and Lido Finance have continued to maintain really stable revenues. In case you're not familiar, Lido makes money by taking a 10% cut of staking rewards paid, of which half goes to the protocol's treasury and the other half to node operator partners. As the staking rewards are paid out in the asset staked, which in Lido's case is mainly ETH, Lido's revenue is also mainly captured in ETH. And despite the asset's pretty heavy price decline since the beginning of the year, if we look at Lido's key metrics charts, we can see that their USD denominated revenue hasn't really taken a hit at all. This means that their ETH denominated revenue has been increasing steadily despite the market downturn. The same goes for ENS, where revenue comes from domain registrations and their annual subscription fees that are also paid in ETH. And then in general, you'll also notice that NFT marketplaces rank pretty high on this leaderboard, as they typically have relatively large take rates of total transaction volume compared to, say, lending protocols and decentralized exchanges. For example, OpenSea has a take rate of 2.5%, while the decentralized exchange SushiSwap's cut of trading volume is only 0.05%. You can dig deeper into the earnings leaderboard via the link in the description. This week, we also published a new episode of 15-Minute Fundamentals with Decentral Games, the team behind Ice Poker, so listen in to learn about building a sustainable play and earn ecosystem in the metaverse. Then on to the most interesting charts of this week. Starting with Ethereum, a really interesting fundamental development to follow has been related to the ETH issuance rate post-merge. As ETH token incentives are no longer being distributed to miners, which was happening at a historical rate of around 13,000 ETH per day, and are now only distributed to validators at a rate of around 1.6 thousand ETH per day, the issuance rate has dropped by over 90%. This is a super interesting data point, and we can now see that ETH has even been deflationary during certain periods of high usage. For example, on the 27th of September, Ethereum's revenue, so the amount of ETH burned, was $2.4 million, and token incentives were $2.1 million, which means that on that day, the ETH supply decreased by around $300,000. The ultrasound money narrative is getting stronger by the day. Looking at user activity on different EVM-compatible blockchains, an interesting data point is that Binance Smart Chain is currently number 1 by some margin, having peaked at over 2 million daily active users in December last year. Drivers behind this activity include Binance Smart Chain's cheap gas fees and their simple onboarding process. In general, most blockchains have maintained somewhat stable user activity over the past year, despite the market downturn. Looking at Polygon and Ethereum, we can see that they're neck and neck in terms of user activity, with an average of a bit under 400,000 daily active users in September this year. At the same time, Ethereum Layer 2s, including Arbitrum and Optimism, have yet to see widespread adoption. Over the same time period, Arbitrum averaged 32,000 and Optimism 18,000 daily active users. The final chart in this week's recap showcases how NFT marketplaces have performed during the first 6 months after launch. The key takeaway here is that subsidized NFT marketplace launches have yet to result in positive earnings. Although LooksRare gained 30,000 active users immediately following their launch with the help of a massive token incentive program, this has not proved sustainable. User activity has since declined a lot, with a total decrease of over 75% from January this year. Over the same time period, competitor OpenSea has maintained an organic user base despite not having token rewards, with over 370,000 active users in September this year. While you've all probably heard the headlines of NFT volumes dropping by over 99%, this is not exactly true, as the peak trading volume was almost entirely driven by reward farming on LooksRare. If we disregard the most active reward farming period, so January and February this year, NFT volumes have come down similar to DEX volumes. So not 99%. So remember to always do your own research to see what's actually going on. This chart is also a great visualization of how the NFT market has developed since early 2020 when OpenSea started first generating revenue. During its first 6 months, OpenSea generated a total of $300,000 of revenue. They then went on to average over $2 million per day during the bull market, and even after recent price action, they're still averaging over $300,000 in revenue per day. Quite a growth story. So there you go, some charts and trends to keep an eye on. I hope you found this valuable, and make sure to head over to tokenterminal.com to create a free account and dive even deeper into the data. I'll see you next time.